Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, March 6th, 2009. Well, the markets are selling again, but it's not a big sell-off, and we're seeing the markets kind of be mixed all day. They've been up, they've been down, they've been up, they've been down, back and forth. You're seeing a little bit of a bounce come into the 20 moving average on your intraday 10-minute chart on the SPY, and now you're seeing a little bit of a sell-off, and that's normal. Again, remember, first hit of the 20 here after a little bit of time, there should be some resistance, especially when you're dealing with a market that's been as weak as this. This morning we got some jobs data out, unemployment at 8.1%, but the thing that kind of rocked the market was the revision from last month. The unemployment rate this month was not tremendously horrible. It was kind of right on par with what expectations were. But they revised last month's job losses to well over 600,000, and I think that was a little bit of a shock to the markets, at least initially. So we did see a little bit of a gap up this morning. You kind of had a continued rebound from the last candle of the day here, where you shot up this morning, and you actually did see a little bit of a rally, a little bit of short covering maybe coming into play. But before you knew it, the market started to sell, and the selling really continued straight all the way down until we touched the lows from yesterday. And the market saw this point, as a kind of a pivot low, and the markets ever since then kind of got a little bit of a bounce back towards that 20 moving average. So what we're going to do today is kind of start with the overall market analysis, going into our trendline analysis techniques, give you guys a little idea about what we do in our nightly videos to our premium subscribers in the research center at InTheMoneyStocks.com, and show you guys a little bit about how you know exactly where the market's going to bounce, where it's going to pivot, where it's going to kind of top out, where to short, where to go long, where to sell, where to buy. Okay, so let's start right away. First of all, let's start with today's opening levels and then the move up. How did you know the market was probably going to meet resistance up in this range on this pop? Because you can see the market opened, sold off a little bit, came back, and then started to rally. First of all, it pierced the 20, but how do you know it was going to go above the 20? Well, what you really want to do here is take the level, the opening high candle from yesterday, this upper resistance, and you can see this is the same line we talked about yesterday, how you had multiple pierces on the upside, and the market just could not get through it, and ultimately that caused a major sell-off as every attempt failed to get through. People just threw in the towel, and you saw the sell-off yesterday. So you want to take that level right here across where the market all kind of pivoted before it fell to the lows, and take that level and just draw a straight line right across, and look at that. Almost to the penny where the market's high was today is right in line with this pivot point. All right, and again, notice how the bars kind of traded sideways on that. That's giving you a good idea. There's resistance there yesterday. The same level will apply to today. So again, you want to translate yesterday's data, last week's data, all the way over to today's charts and give yourself a good level for the coming day. Now, the next levels you want to draw in, obviously you want to figure out how you knew the market was going to probably find some support down here. And number one, what you want to do is actually take this low and just extend it right over. And look at how the market came right into here, found support, and then it actually bounced off. So those are the easy ones. The harder ones are the kind of angled lines, the angled trend line analysis that you want to come into play here. And again, what you want to do is take your lines here, and let's draw them right down. Okay? And you can see here, connecting it to the high pivot point before the next leg down yesterday, from the high of yesterday, you get that exact line which comes into support. So all of a sudden you're finding multiple levels down here as good support. All right, that's very, very key because it's telling you that there's not only one support line, but two as well. Okay? Going from there, you would next want to look at the overall trend lines about the bounces. Now, first of all, you know the 20 moving average here will be very, very easy bouncing levels. So again, you can see the 20 moving average working as resistance right at this point, but you also want to know if there's any other trend lines that come and coincide. Take the high from the pivot. All right, so this is that high pivot which we connected from the high here to the high here. Now take this pivot point, extend it to the secondary pivot, which is this high move right over the 20 yesterday, and look at that line coming into play. Amazing stuff, guys. And it even gives you the exact high. It's not coinciding with the 20, it's coinciding right above that 20, right in that range. So all of a sudden we have our low in the day, we have our gap down where we came to support, we have our high, and we have our pivot high for the day. Now this is telling you have support right here, and you can see the market trying to find minor support. Now right away, the first thing I'm looking for is, do we get below this line and confirm the move down? We get below that line, confirm it, your minor support line will be right here at the very, very low of the day before we bounced up. And at that point, if we break that, then you're all of a sudden talking about possibly a pretty hard sell-off in the markets. Now I just want to go into a couple things here. I want to talk a little bit about what the markets are doing today. The S&P down about 4 points, NASDAQ trading down by about 15, and the Dow down about 33 on the day. So just a minor sell-off. The NASDAQ definitely is weaker, and I can talk a little bit about what's weak in the NASDAQ. Apple Computer down almost $5, Google down almost 5.5, Baidu down 6.5, Amazon down 360, Research in Motion down $1.75. All right, so that's why you're seeing the NASDAQ percentage-wise lead the market lower. Financials, again, are very weak and not a good thing. And remember what we always say. We say for this market to really get a suspended rally, meaning a multiple-day rally, you need to see the financials lead and oil or the commodities lead. So you need the dollar to weaken. Obviously the dollar weakening would buoy financials, and you need the buoy oil. And the financials need to get a bid. Now, what I'm not liking today is Goldman Sachs. Goldman Sachs on the intraday, ugly. Folks, you had a major breakdown. We posted this on the free Rant and Rave blog. You guys should be checking that multiple times a day, or even subscribing to some of the Windows. We have Windows alerts, so every time we post, it goes through. We have a new widget thing for those of you that have websites to add it to your website, the Rant and Rave blog. And we have other alert systems on there, the RSS feed. And all of that does is every time we post something, it alerts you guys. And again, this was a great post from today. What do we have here? You see this breakdown line on Goldman Sachs. And we put out the alert this morning, probably around 10 o'clock in the morning, when Goldman was trading up here, that if this line breaks on Goldman, you're going to see a bigger sell-off. The market probably will see extended sell-off today and go negative, and that's exactly what you're seeing. So again, just look at this line, and this doesn't take a genius to see it, but there's just so many charts out there. You have to know where to look. You have to know what stocks to look at. You have to know the levels to look at, and you have to be able to have a trained eye that will show you this stuff. Look at this. You have an obvious support here as you hit here, and this is the 60-minute Goldman chart, and we put this out this morning, and as soon as this broke, the market's really rolled to the negative side, and that's what we're seeing right now. So again, a good call on the Rant and Rave blog, a free blog on our website. You guys all should be checking that, or at least subscribing to the RSS feed. It's all free, so you guys can keep up to date on that. But a great call there on that sell-off, and look at the extended sell-off here, and then also coincide that with the SPY chart. And I'll go back to the 10-minute SPY, and once Goldman broke, you can see down, 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 finally getting a little bid, and now actually hitting support again on the SPY intraday. All right, these are your lower levels. Your upper level resistance will be this trend line right here. You can see it very, very clearly using yesterday's chart. And after that, then you're talking about the 50 moving average, which is right here. And if you somehow break above the 50, you're going to have the pivot high from yesterday right here, and then ultimately this resistance again. So here's all your levels. All right, should we break below this level, then you want to just make sure you're out of this market. You can start to draw on some trend lines. There are some other trend lines here that I can draw in that go actually far below. There's this one, and there's even this one here, which would be something to watch. And you guys can add these in. It's just my chart doesn't go low enough at this time to figure that, to give you guys an idea. But you can draw them in on your own charts this afternoon and get a good analysis about where those levels are. This level would be the one that you'd watch to be hit first, obviously, if we do break this low at approximately 67.91. Okay, so watch that very closely. You can see the market trading live here as I do this video, giving you support. All right, that support line right there, you can see the wick forming. What you really want to see is this market, if you want to see this market rally, it's got to get above this trend line, this pivot from just a little while ago, 30 minutes ago. Okay, next let's go to the 60-minute chart. We'll take a quick look at the 60-minute. The 60-minute just continues to look pretty sad. You have some trend lines here, obvious trend lines right here. This actually looks like it may even connect over to here, and I'm going to even draw that in for you guys. We'll get that right in, because I think that's a very important trend line on the downside. All right, there you go. All right, this is your trend line on the downside to watch. Every time you're getting here, you're getting minor bounces, but it's nothing more than a minor bounce. And you can see how you connect these lows from all the way down here, and it works as perfect support over here, multiple day support. Then we move up on that Wednesday rally. Wednesday rally. Then we come down, test it again on Thursday, never really break below it, and then Friday we're now testing it again to the downside. Again, on the 60-minute, you're looking at this as support. The resistance point would be right here, the 20 moving average, which continues to move lower, but those will be your support lines in this market. Refer to that as the 60, but first focus on the 10-minute. The 10 minutes, the first one as of now you want to be focusing on. Should you start to break up, then you start to look at your 60-minute on a major breakup in this market or a major breakdown, and you look at these lines. All right, guys, that's about enough for today. Just another recap of the markets. NASDAQ down about 16. Markets down pretty substantially. Dow down about 35 plus, and S&P down about 5-6 points here. All right, keep an eye on Goldman Sachs. It is a market leader. We will talk to you on the weekend video. Take care.